And my first question has to be on the banks. Now, the bank Nifty today is giving you a 1,000-point fall. It's been falling over the last couple of days as well. Are you buying into the weakness or are you staying away?
Afternoon, Surabhi. Good to have you back. So pleasure to see you back on the streets. Two things. One, as Nimesh pointed out, the numbers have been pretty solid across the banking pack. So whether you talk about the large cap private banks, the mid cap private banks, or even the PSU space as a whole, advances growth has been pretty decent year on year, quarter on quarter as well. The gathering of deposits has been pretty robust as well. So specifically on the PSU part, if you look at Canada Bank, more than 1 lakh of rupees, 1 lakh crore in terms of deposits gathered for the bank itself. So there is expectations of steady growth happening on that front. A few banks have also shown solid resilience when it comes to asset quality. In fact, asset quality pressures have come down. Provisioning has remained extremely robust at the same time. So I think the slippages, the restructured book, if you look at the SMA2 book as well, is very much under control. And therefore, I think the solid outperformance that we had seen from the banks, the kind of profit that is coming in, I think is more a response in terms of what might get announced in the budgets. And if there is anything detrimental, if further sell-off happens, at least say, let's take some money home. But in my own sense, I think the earnings pedigree should continue for the banks. NIMs should stabilize going forward, but not more in that. So yeah, large private sector, some mid-private sector and selective public sectors. Where I think the space looks interesting from the medium term.
All right, Mayuresh, I want to ask you about the city gas distribution companies. We have IGL's numbers that are flashing for you on the screen, and as we speak, on the top line, there's a 100 crore miss. But what the street will like is that the margins are 50 basis points better than what we were working with. We were working with a number of close to around 11%. It's coming at around 11.5%. So there is an EBITDA beat despite a top line miss. And that explains why the PAT number is bang in line with what we're working with. Mayuresh, any view on these companies, IGL or any of the other peer set?
Afternoon, Nigel. For the city gas distribution companies in general, the tough environment, specifically in a rising gas scenario, was very, very difficult because the pass-through was not happening completely, and that took a huge toll in terms of the EBITDA margins and the reported EBITDA per SCM. Now, the expectation largely is with gas prices expected to normalize. Natural gas prices have come off quite significantly. We've seen LNG prices come off as well. And therefore, the revision which happens every 6 months, the normal gas pricing should ideally be lower, both on a quarter-on-quarter basis as well as on a 6-month basis. What does that do to volumes? Because I think the pass-through which had happened last time round, the EBITDA margins per SCM should get maintained. At the same time, a lot of the end users, we had been reading a lot of reports at Morbi, where Gujarat Gas, a big industrial gas provider, the industrial users were looking at alternate sources with elevated gas prices. They might come back in a significant fashion as well. And with government targets of 15% expected to come through from 6% where we are at this point of time, I think the volume growth should be very, very evident over a longer period of time. So yes, I think there has been a period of underperformance for these companies, but largely I think the numbers should start stabilizing from this point on.
Mayuresh, I have a trader type question for you. Budget is on the 1st, right? I mean, Wednesday. Thursday is the weekly expiry. If you wanted to take a punt one way or the other on the market post-budget, what's the best way to do it?
So Prashant, I think at O'Neill we've got a system where we are waiting for a follow-through day. So basically, I think once the budget is out of the way, and if there is nothing detrimental that the market is looking for, the same evening the Fed will come out with its rate decision as well. I think that is something which favors the markets as well. And if we do see a move of 1.5% on the Nifty immediately after the budget, which is on the 2nd, which is the expiry day, I think the market should be in a fine fettle. And what we've probably looked at in terms of the bottom of 200 points down from the current levels, I think that should probably hold. We should get into a confirmed uptrend, and a whole host of breakout stocks should start getting added on your list. So yeah, I think if nothing is detrimental and we get a 1.5% move on the Nifty or the Sensex itself, we'll start buying aggressively with good breakouts on that expiry dates.
Okay, from